macro analyst, but and I'm probably a bit biased. I've been a gold bug my whole life. Only I've been saying for 20 years that gold price should be $10,000 and above, and it should be. The fundamentals are definitely there. So I think what you've seen in the gold space, certainly with this current run up over $3,000, and it is over $3,000. I mean, let's face it. Well, that's a number that's very interesting. You know, there's a lot of calculations if you look at, like, if you were to take the debt, if you were going to try to pay off the debt in the United States, what would the gold, with just gold, what would the gold price have to be? I think those calculations I commonly see are around $10,000 or $15,000 an ounce.
In 2023, gold soared 40%, echoing the bull run of 2010. Since the start of 2024, it has climbed another 12%, primarily driven by market concerns over Donald Trump's proposed global tariffs. Chris Gerteisen, CEO of Nova Minerals and a longtime gold advocate, believes this precious metals bull market is only beginning, with gold poised to break well beyond $3,000. Gerteisen has argued for 20 years that gold should be priced at $10,000 or more, and he maintains that the fundamentals strongly support this view. He attributes much of gold's upward momentum to aggressive central bank buying and a global shift toward hard assets. Currently, central banks and investment funds hold over 36,500 metric tons of gold, with the U.S. leading at 8,130 tons, followed by Germany, 3,350 tons, Italy, 2,450 tons, France, 2,440 tons, and Russia, 2,340 tons. Central banks have been on a historic gold buying spree, accumulating 1,082 metric tons in 2022, 1,051 tons in 2023-23, and 1,041 tons in 2024. This trend intensified in Q4 2024, when central banks purchased 333 tons in 3 months. According to the World Gold Council, global central banks are expected to maintain their gold appetite in 2025, with purchases projected to range between 900 and 1,100 tons. This outlook is fueled by ongoing geopolitical uncertainty and the potential weakening of the U.S. dollar. Gerteisen points to historical calculations that assess gold's fair value based on debt levels and money supply. If gold were to fully back U.S. debt, its price would need to be between $10,000 and $15,000 per ounce. Even the U.S. debt clock reflects similar estimates. While he avoids placing a specific timeline on this move, he firmly believes gold is on a trajectory towards significantly higher valuations within our lifetimes. We're about to explore the video, but first, subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
Macro analyst, but and I'm probably a bit biased. I've been a gold bug my whole life. Only I've been saying for 20 years that gold price should be $10,000 and above, and it should be. The fundamentals are definitely there. So I think what you've seen in the gold space, certainly with this current run up over $3,000, and it is over $3,000. I mean, let's face it. If you and I was just down at the shop the other day. If you and I want to buy gold, it's with the premium. I mean, certainly the spot price is around $2,900, but if you want to buy gold, it's going to cost you $3,100, well over $3,000 already. So the gold prices for the average investor is already over $3,000. So let's be clear on that. So I think there's been a lot of central bank buying. The world is moving towards more hard assets, tangible assets. We've had decades and decades of financialization, globalization, all of this, where it's been about, you know, we're going to print U.S. dollars as the reserve currency, and the rest of the world is going to sell us cheap products. So I think that's all changing, and we're going back to a world of real assets. It's already started. If, you know, some people say like that gold is what's the word? A barbarous relic. Well, if it's a barbarous relic, why are the central banks buying in a frenzy right now? Because they know that it's really, I mean, there might not be an official gold standard, but it really is the basis of the economic system. And that's why there's, you know, reports of so much gold moving around the world now, from London to New York, because really, in terms of first movers, the United States is first movers to start bringing manufacturing back and a real, more hard asset monetary system. And that's what's happening. That's what's happening. That's why you've seen the current run up. And it's only just getting started. It's only just getting started. I mean, they say there's been such a lack of appreciation by the average investor in the U.S. that the numbers are like, if you look at portfolios of the, you know, investment portfolios on average across the United States, it's like less than half a percent of the investment going into gold. If you even move that up to 1% or 2%, that'll have a huge impact, and that is happening now slowly. I mean, just look at it. You have the president of the United States talking about auditing Fort Knox, and gold in the conversation at the highest echelons of the government every day now. So, that's a big bully pulpit, as they say, and people are paying attention. And this is what brings the retail investors in. First, the sophisticated money over the next few years. And then once the FOMO kicks in, it's off to the races, I would say. But, it's interesting. If you look at, I read an article the other day, I believe it was an Egon von Greyer's piece, if I'm not mistaken. And he said, okay, and his argument is that I believe kind of overall is that there is some manipulations with the gold paper markets in these things like the LBMA and the COMEX and things like that. And in that article, it was very interesting. I found it fascinating. If you looked at what would the gold price be if all the gold trading and the price was set just during the LBMA hours of trading, like from the morning fix to the afternoon fix. If you just took that and there was no other trading outside that, the gold price would currently be like $1,100, $1,100. Now, if you reverse that and you said like, well, what would the trading be, or what would the gold price be if the gold price was set just outside those LBMA paper trading hours? And the gold price would be $14,000 an ounce. And so that was a pretty huge contrast. So, and the argument there is what's going on during those paper trading hours with things like LBMA and COMEX, and I thought that was quite fascinating. So $14,000 an ounce. Well, that's a number that's very interesting. There's a lot of calculations. If you look at, like, if you were to take the debt, if you were going to try to pay off the debt in the United States, what would the gold, with just gold, what would the gold price have to be? I think those calculations I commonly see are around $10,000 or $15,000 an ounce. What if you were, various calculations of what the money supply is out there, the dollar money supply? Those calculations, if you look at the U.S. debt clock, I think they always come out in that range as well. And so, that would be, I wouldn't put a time on it, but that would be something that sounds reasonable to me, where the gold price is going here in our lifetimes, for sure.
Gold mining plays a crucial role in shaping economies and driving global markets, yet only a few nations dominate the industry. While some have long held their positions as gold powerhouses, others are emerging rapidly, reshaping the landscape of gold production. According to Chris Gerteisen, the tide is turning. We're just at the beginning of a major shift. Companies like Newmont and Barrick report strong cash flows in their quarterly results, signaling a changing dynamic in the industry. Newmont, the world's largest gold mining company by market capitalization, is approaching a $50 billion valuation, while Agnico Eagle Mines is closing in on $40 billion. Barrick Gold follows closely behind at nearly $30 billion. Both Newmont and Agnico Eagle Mines offer dividend yields exceeding 2% for income-focused investors, making them attractive options. Gerteisen also emphasizes the significant gap between gold prices and gold stocks, particularly among junior miners, which have yet to reflect the full potential of the gold rally. He sees this as a compelling opportunity for investors looking to capitalize on the sector's upside. Now, let's redirect our attention to a video.
Well, there's just a lack of appreciation for gold. It's just been, in the out of the side, investors are into AI and these type of things, some of these cryptos, but it's just starting. So I think you're starting to see these companies like Newmont and Barrick in their quarterly reports. They're starting to sit on a lot of cash, and I think in the quarters that we have coming forward here, like Q2, Q3, Q4 of this year, that cash pile is just going to grow and grow. And that's when investors will start to take notice. It's just starting. And once they see what kind of cash and the M&A activity starts to accelerate from those cash piles that companies like Newmont and Barrick have, we're just right at the beginning of it. So just an underappreciated sector, just a kind of a belief or an attitude in the investment community that the days of gold are over. Well, look, I mean, gold's been money for over 5,000 years. I'm still betting on that horse, and I think the rest of the investment community will follow here as well. We're right on the cusp of that. So, and it's a big opportunity for investors. If you look at the gold price relative to the gold, like junior index or these indexes, there's a big gap there, big sector gap for these gold stocks to catch up for sure. And again, Nova Minerals is poised to do that because it's not just antimony. We're a dual commodity company now, gold and antimony. We're hoping and we're feeling very positive that some type of grant will be forthcoming. And so that's big news, of course, to really get into that stibium, that first, we call it the stibium prospect right there. And so we'll be doing, and then we'll start our field program for antimony and gold. Like I said, there's good gold in that stuff. And then 2 rigs at the RPM deposit, 2 diamond rigs there to continue to step out and grow that resource. I mean, that resource, our target there is 500,000 ounces at 2 grams per ton. Internal to that, 200,000 ounces at 5 grams per ton. That's the starter pit. And then the deposit currently in total with all the zones is about a 1.1 million ounce deposit. We see that as easily a 2-3 million ounce deposit, and we'll start to try to prove that up here this year. So all the news flow coming from the results and from the drilling results. And also we have an RC, our own scout drilling rig that we'll use around RPM. We have some surface anomalies there that are looking very promising to intersect additional high grade zones. And then of course, just our exploration geologists, boots on the ground. It's mostly outcropping out there. It doesn't require complicated, deep searching, expensive exploration techniques. We see it right there on the ground. So new discoveries and everything kind of exciting that comes out of new discovery. So all that coming this year, this will culminate in resource updates for not only the gold, but the antimony as well by the end of the year. And then the technical studies happening in the background, everything converging on this goal to come out with our feasibility study in 2026.
Gold is more than just a precious metal. It's a financial stronghold, a key technological resource, and a symbol of stability. As economic cycles shift and geopolitical tensions escalate, gold plays a crucial role in global trade. In 2023, several nations reinforced their dominance in gold production, each pursuing unique strategies amid various challenges. Its status as a safe haven asset remains intact, attracting investors seeking wealth protection. Record central bank purchases, growing economic uncertainty, and a renewed appreciation for hard assets fuel the recent gold value surge. As central banks continue their gold buying spree and major mining companies accumulate cash, the sector is poised for significant growth, offering a promising outlook for investors. With this aggressive accumulation, could gold reach $10,000 in our lifetime? Join us as we dive into the video for a deeper look. Don't forget to subscribe and click the bell icon to stay informed about our latest updates.